People have been leaving the Bay Area due to high living costs. That is true. Major Bay Area cities are on population decline in the last several years. That is true. San Francisco is a ghost town. I think so. Bay Area real estate market is crashing hard. Well, be careful with what you mean by crashing. In terms of sales volume, yes. But in terms of the price, not really. Despite all the negativities on the internet about how Bay Area real estate housing market is crashing and how the homes here are selling pennies on the dollars, the truth is, well, at least as of now, the 2024 spring, the home price here still remains strong and steady. In this video, I want to go over with you the journey of Bay Area housing market from the pandemic situation until now, so that you have a better picture of what's really going on here and how things might look different going forward. I'm going to show you my computer and the data from my MLS in some of the major markets in the Bay Area. The same number can be found on the Redfin data center, and they may look different, but you could essentially find the same information there as a consumer. But since I'm a real estate agent here in the Bay Area, I'm just going to use the MLS to show you something. So I would go to the stats and custom. So I want to create a custom time frame. Let's do January 2020. This is when the pandemic just started. And let's say February 2024. That's pretty much where we're at right now. We're on March 10th, but the January's data is complete. So we want to look at the average sale price, and we want to group by month. And let's also do the month of inventory. What that basically is how many homes are for sale versus how many homes are being sold, that ratio. It basically tells you how the supply demand relationship is of that month. And let's see, let's just do single family home by county. Let's just do San Mateo County. And so that would be basically all the single family residential sales between January 2020 to February 2024, and show me the average price by broken down by month and the month of inventory. So let's generate. Okay. Yeah, so the green line is the average sale price in San Mateo County, and the blue line is month of inventory. So the lower it is, that means the less homes are for sale on the market. You can understand it that way as compared to the home price. So let's say right around the pandemic, actually, let me also pull up the interest rate history during these periods. So let me just get that real quick. So let's look at the interest rate. Let's also do a 5-year interest rate graph. So you can see the graph here. And what I'm going to do is just to illustrate something easier. So I'm going to put these two graphs side by side. All right. So now I've got these two graphs side by side. So on the left side is the mortgage rate between, here it says, basically between March 2019 till March 2024. And on the right side is the graph of San Mateo County single family home sales between January 1st till I will say February, but it shows January 2024. So as you can see at the beginning of the pandemic, the rates were kind of like the 2019's rate. And then soon as the pandemic hits at the beginning of 2020, the rate starts to go down for pretty much all 2020 and pretty much the majority of 2021. the rates are really low, like this area of the graph. So, and now with the home price, what happens is that at the beginning of 2020, because of the pandemic, a lot of people were kind of scared, freaked out. So there's a little spike of the monthly inventory. At the beginning, what that means is like a lot of people decided that they don't want to sell. So more homes were on the market, but not for long. So and then the rates starts to drop at the beginning of 2020, and it took the consumers, at least in San Mateo County, a little bit of time to react to the market so that the rate starts to go up as the inventory monthly supply starts to go down. You see the blue line and the green line are kind of going the opposite direction, like right around here, which is pretty much all the 2020s. And then in 2021, like between 2020 and 2021, that was kind of like the bottom. Like nobody really wanted to sell because everybody was afraid of COVID and the rate was really low and buyers were ready to buy. And therefore, homes on the market, were selling like literally in 3 days. So you'll see like this is where it's being reflected on the graph. And the home price around this time, it starts to jump. It starts to really jump too. And pretty much again throughout the entire 2021, rates on the left side, it's still very low, and therefore the inventory for the majority of 2021 were really low. And the home price, the average sold price, even though it's got ups and downs, but this level is a lot higher than at the beginning of the pandemic. At the beginning of the pandemic, it was right around $2 million average or below. And during the peak of 2021, when the rates were low and inventory was low, the homes were selling $2.5 million. So can you imagine, like literally within a year, the average home price in San Mateo County appreciate by $500,000? But that's really what was going on here. And then as we can see that the rates in like starting on March 2022, the beginning of March 2022, year 2022, it starts to go up steadily and until pretty much towards the end of 2022, the rate really peaked out, and the rate went up literally doubled and tripled right here compared to what it was down here. So that's what happened to the rate. And then what happened to the home market right around that time, I would say literally like right between this time frame, like right here, November, March till November. So like right around this time frame here, what happened is, as you can see, like the inventory, the months of inventory start to shoot up very quickly because a lot of homes that were listed on the market like right around the a month or two earlier, they were still expecting a high price, so it didn't sell. And because the rates have gone up, and then there are new homes that come on the market right around like the following month and the month after. Those new inventory are basically competing against the homes that were left on the market from the previous months or the previous quarter. So that accumulation is what you see from here to here, like a really high jump. And the home price also starts to go down because homes usually take about a month to close. So there's a little bit of a trailing behavior. You'll see like a 3-day trailing. So the home price is still high here as the inventory starts to go up, and then the following month the home price starts to go down, and it starts to go down, and the rates over here peaked out around November 2022, and so the home price starts to kind of go to the bottom right around January 2023. So again, it's like about a month or two trailing. And then what happens in 2023, as we can see, which is just about 12 months ago, the rate starts to go up again. I've made videos talking about what the market was in 2023. The main theme of 2023's real estate market was the fact that the interest rate continues to remain high and even higher. So that constitutes the majority of what this graph is in 2023. As you can see, the interest rate continues to go higher. Eventually peaked out at right around like November timeframe in 2023. So what happens is as the rate continues to go up, you would expect the home prices to continue to go down. Especially it was being reflected during this turn of the market, this turning point. However, though, because the race continues to go up, what it's also doing is that it's also making the seller believe it's not a good time to sell. So what happened in 2023 is most of the sellers aren't selling. And you can see that the inventory, a month inventory, the blue line starts to go down significantly and continues to do so. And what that happens is that even though the rates are high, which is pressing the buyers' buying power, but because the inventory is so low, therefore home prices are still remaining steady, as you can see, which is the case for most of 2023. The home price still kind of remains a little bit lower than the peak year. Like in this graph, like $2.5 million is kind of like the average during the peak. And in 2023, it's probably around $2.4 million. It's not exact, but just by the look of the graph, which is still significantly higher compared to the beginning of the pandemic. So this basically constitutes what's going on in the majority of 2023 in the San Mateo County. So right now, so as you can see that the rates do have a lot of effect on the home prices based on the relationship between this graph and this graph. But the rates are also affecting the month of inventory, the supply. And the supply being low also causes the home price not to go down. So therefore, it kind of created a deadlock in the market in 2023. And right now, we're in 2024 February's data. As we can see that the rates have come down. If you look at over here, the rates have come down compared to the peak of November, down to what it appears to be close to 6.5%, which is pretty much like the average, slightly above the average of the entire 2023's average rate, even though it's a lot less than the peak of 2023, but it's still very high. So as of now, what happens is that the market is we're having more inventories. As you can see, the inventory starts to go up, but it's still nowhere near where it should be if you want to have the price being pulled back. And which means as of now, based on what we're seeing, the market is still very competitive. We have more inventory, but we also have a lot more buyers. Now let's go back to the MLS. Pretty much every county, the majority county of San Francisco Bay Area follows a similar graph. So I'll just give you an example. Let's do San Francisco. So San Francisco market is kind of similar, even though the shape is not exactly the same, but you can see that at the beginning of the year, it's it's kind of like up and down. And then 2021 and 2022, it's going up. It's got two peaks. And then it goes down 2023, but then the price kind of remains kind of leveled on average in 2023. And here we're in 2024. And the same story I would expect to take place in, let's say, Alameda County. So if we do Alameda, yeah, even though the shape might be a little different in Alameda, but it overall kind of tells the same story. Where at the beginning of the year, the period 2020, it was low, and then it goes up, and then 2021 and 2022, it kind of really it goes up significantly. And in this case, July 2022 was the peak, and then it went down, and then it kind of bounced back in 2023 due to the low inventory. And this is where we're at in 2024. We're still kind of like the same level as 2023 as of now. And let's see, Santa Clara County. And 2023, yeah, Santa Clara County follows the same story. At the beginning of the year, a pandemic, it was low, and then right away it starts to go up, and then it really intensified in 2021, 2022. It got really high, and then 2023 it went down, but it's still remaining strong and steady. And then here we are in 2024. So every county's graph is similar, based on what we see, even though the exact curve will be a little different, but it's overall telling the same story. And notice that every county has population dense market, like in the cities, and also like population not very dense communities, like in the mountains. These two are completely different market. So in San Mateo County, you'll have population dense cities like Redwood City, Menlo Park, San Mateo, but you will also have cities like Half Moon Bay, Pacifica, Woodside, La Honda, where homes are like on 10-acre, 5-acre lot, $30 million homes. And those markets are completely different. And but in most of these graphs, they are being influenced more so by population dense market. And but for the exact city, you'll have to go down to the exact city, and then you'll see slightly different story based on the actual market of that city. Well, the point to make here is that even though the rates are lower a couple months ago compared to a couple months ago, I mean, this is where we are, and the rates at the peak is was right here, but it's still the average overall of the 2023's rate. And this rate is going to help create more inventory, but also create a lot of buyers' demand. This will increase the sales volume, but it's not going to decrease the sale price here. So you may want to ask, if all of the news about people leaving Bay Area is true, and if San Francisco is becoming a ghost town and more people are working from home, why the home price hasn't crashed yet? So with that, I want to show you just a couple of things happening to the local economy. So let's go to Google. So let's first look at the performance of some of the major local employers' stocks. So 5-year Apple stock. So the beginning of the pandemic versus where it's at right now, it's doubled or tripled. And let's look at Facebook stock of the last 5 years. Now it's $505, but what it was at the beginning of the pandemic was much lower. It's like not even half. And let's do one more. Let's do Broadcom. Yeah, Broadcom stock was on the tiers. So let's say 5 years. Geez, gosh, if you bought Broadcom stocks at the beginning of 2020, $324, now it's like almost it's 4 times, it's quadruple. And I'm not even gonna go into Tesla, Nvidia, Amazon, because I watched Nvidia stock when it was $38. I never bought, and now, well, now it's like $875. So don't even think about it. But anyways, the bottom line is, yeah, let's look at Nasdaq, because Nasdaq is where all the tech company stocks are. So the overall Nasdaq performance, it's basically telling the same story, right? At the beginning of the pandemic, it's not very high, it's low, and now it's doubled for sure. And S&P 500, let's do S&P 500. And same thing. Now it's 5,123, and at the beginning of the pandemic, it's around half. So basically, every stock is telling similar stories. And since the pandemic, there are a lot of wealth have been created, and a lot of them have been created here in the Bay Area. And yes, there are certain number of people moving out of the Bay Area permanently, but since the companies are here, the R&D centers are here, and there are still a lot of rich venture capitalists still here on the Sand Hill Road, a lot of high earning jobs and opportunities aren't going away from here. Moreover, with people's stock portfolios increasing insanely, investing in real estate locally become one of the first thing they want to do rather than paying taxes to the government. Now, another thing to consider is inflation. And so take a look at the inflation. We all know that the inflation had gone through the roof in the last few years. Not only home prices have gone up, pretty much everything else has gone up too, as you can see. And but even though the graph suggests that the inflation has gone down due to all the efforts made by the government, but the price of daily consumer goods are still not coming down. Now let's take a look at the minimum wage of, let's say, San Francisco. And let's take a look at this graph right here. As you can see, the historical minimum wage in San Francisco, it has always been going up. And so right now, like in in 2019, before the pandemic, it was about $15.59. And then the pandemic until now, it's $18.67. So you can see once the minimum wage goes up, the cost of consumer goods, even building materials like a gallon of paint that you need to paint your house is going up. Bottom line is, due to the fact that local buying power hasn't faded away, the market here remains strong throughout the pandemic, and I expect the market to remain strong and steady as such in the near future.
People are always concerned with whether a big crash is coming or not, if this happens or that happens. I made another video explaining what it would take for another crash to happen, so it's on my channel and make sure you guys check that out too. All right, thank you for tuning in for a market update video. Comment down below and reach out to me privately if you have any questions. My info is in the description. I always love to chat. With that, I wish you nothing but the best. Take care. See you on the next video.